Today, we're going to be talking about tech giants Apple and Amazon. But before we get into that, let's touch on today's update that we got from Federal Reserve Chair Jerome Powell. So the S&P 500 and the NASDAQ both post new record highs thanks to Fed Powell's caution on keeping rates high. During his talk earlier today, he shared some insights on the current state of the market, the labor market, and interest rates. He mentioned that the labor market is strong. This is crucial because it suggests that the economy is growing at a healthy pace without causing runaway inflation. Powell also emphasized that the Fed is waiting for the right moment to cut interest rates. This cautious approach is designed to ensure that any changes support sustainable economic growth. For us investors, it means that we might see even lower interest rates in the near future, which can impact various sectors differently. So, Jerome Powell, someone we all should know because when he talks, it affects the market. Over the last few days, for example, on February 5th, Amazon, Apple, Microsoft, and Meta all achieved all-time highs. And Apple, I know for sure, did it again today. So as we were going into the end of last week, that rally followed the news that unemployment had hit its highest level since 2021. There are many factors that impact the stock market. And you have to be mindful of the prices of the investments that you want to add to your portfolio so that you can know if this is a good time to expand your positions. So now let's take a look at Amazon. On the month, they are currently up 6.56%. Amazon has been a dominant force in the e-commerce, cloud computing, and now even entertainment and logistics areas. Here's a few reasons why Amazon has been a great investment choice in my portfolio. They give diverse revenue streams. Amazon isn't just an online retailer. Cloud computing division is a massive revenue driver with high margins. They also have their hands in so much innovation and expansion, from AI to groceries. Amazon is always trying to expand. They've acquired Whole Foods to roll out their Amazon Fresh, and they show a commitment to dominating in every market that they enter. And as far as their e-commerce, they come in number one, far ahead of any of their competitors, and their competitors cannot match their delivery speed and efficiency. They strive to reinvest their profits into new ventures to grow the company and keep ahead of the curve. In their last earnings report, they showed strong revenue. It is tough with this current economy, and there have been some indications of a change in consumer spending patterns. But in time, we will see if that impacts Amazon's future performance. But definitely a top contender when it comes to both e-commerce and cloud computing services. And I just came across this information. Amazon has purchased a small stake in Neiman Marcus as part of its Saks Fifth Avenue. So that's a $2.65 billion acquisition of the luxury retailer. The investment marks Amazon's latest attempt to enter the luxury retail market, leveraging its data and logistics expertise to enhance Neiman Marcus operations, combining technology in order to gather information from the customers and offer a more personalized option and improve logistics for both Neiman Marcus and Saks. This Saks and Neiman Marcus combined entity is expected to generate $10 billion in annual sales, poising Amazon to gain insights and momentum in the luxury market. Amazon has definitely changed the face of retail over the last 20 years, but it has basically not done it when it comes to the luxury goods market. So we shall see what this stake in Neiman Marcus does for the company in time. Apple is the position that I have the largest amount of as an individual stock in my portfolio. On the month, Apple is up 18.41%. Let me share a few points as to why Apple has been a solid choice for me to have in my portfolio. They have a strong brands and ecosystem. Apple has created an ecosystem that locks in its customers. If you have an iPhone, you most likely have an Apple Watch, a MacBook, an iPad. You use iCloud and Apple Music. It all just works together. They continue to innovate their products like their Apple Watch and AirPods, as well as advancements in their core products like their iPhone and Mac. In addition, Apple has a massive cash reserve, which allows them to use it to focus on buybacks, dividends, and strategic acquisitions in order to continue to grow the company. So, this has led to a financially stable company overall. Now, they still do have some challenges, such as supply chain and competition in the smartphone category. But they stayed consistent with creating high quality products in order to mitigate these risks. So, before I run through a few comparisons between the two companies, don't forget to like, subscribe, and hit the notification bell. Leave me a comment and let me know what tech giants you're still working on building up in your portfolio, or which ones are performing the best for you right now. Currently, my Apple stock is up 51.8%, and my Amazon is up 56%. So, Amazon has shown faster revenue growth due to its diverse business model, while Apple's growth is more steady and driven by product innovation. Now, when it comes to profit margins, Apple generally has higher profit margins because of the premium pricing strategy, whereas Amazon operates on thinner margins but makes up for it by the amount of volume. And when it comes to risk, Amazon faces high regulatory risk and competition in various sectors, while Apple's risks are more centered around product innovation and supply chain management. So personally, I'm glad that I incorporated both of these into my portfolio, but I am definitely looking at other investment choices to get started building up in my portfolio that could have more significant gains over time than some of the positions that I already have been working on over the last few years. So work on determining what your investment strategy is. I know I'm looking for companies that are consistently pushing the boundaries, expanding into new markets, that have strong brand loyalty, steady growth, as well as strong financials. I want to know that the companies I'm investing into are still on track to continue to grow in the future. So remember, when investing, it's crucial to do your research, come up with a strategy, and be consistent about working towards your goals. You don't have to be a millionaire to invest like one. Choose investments with strong fundamentals, just like whoever you aspire to have a portfolio like, whether it's Warren Buffett or you fill in the blank, and just work on achieving that on your scale, what your budget can allow. And when in doubt, it's okay to start with an ETF, a basket of stocks, invest in all of the whole S&P 500 through one investment choice like VOO, or the entire US stock market by investing into VTI. So let me just take a look and give you an update on how those are performing for me. So in my portfolio on Webull, my VOO is up 23%. VCI is currently up 29%. So you will definitely see growth by investing into your ETFs and also a quarterly dividend. Don't forget to like, subscribe, hit the notification bell. And if you're ready to open a new brokerage investing account, check out my links. They'll be in the description and pinned in the comments. So for me, investing is about the long-term gain, not just trying to get those quick wins. So make sure to leave me a comment, and I will be coming to you more with stock market updates and other ways for us to focus on investing, saving, and staying out of debt. Thanks for watching. Okay, bye.